So this is my strategy. It's real simple. I'm gonna do this real quick, but basically, right, you got a area of resistance and support. Resist, right, and support. Pretty much all I'm looking for, right, is price action. If you ever see your candlesticks that are not they're not moving in a trend, and when I mean a trend, I mean like it's going up or it's going down, then there is no trade. And like this is the only strategy that I use. I don't use indicators. I don't use I don't use anything. I just use support and resistance, and I know how to read the candlesticks. Uh, so I use that, and like let's say like price were to come out of here, right? It breaks out. Most people freak out when they see that price breaks out of that area. So they'll buy right here, right? You're going to get cooked 99% of the times if you buy at a high like that, unless you have a huge account. When price breaks out of any this area, out of any area, right? If it's a resistance, if it's a support, usually price is going to come back and test where it broke out of to see how strong that area is, right? So if it does hold, then price will continue and push up, right? This is where you want to buy. And this is where I buy all the time, right here. Why? Because price made it high, it came back, tested this area of resistance that kept it was strong because it kept pushing this price action down, right? It broke out, came back, and pushed up. Once it breaks this top right here, since this is a new high that it made or just a high that it made, once it breaks past that, then you're able to place your trade for a buy to let price continue, right? And it's the same thing if it goes the other way, right? It's the exact same thing. If price makes a high, right, or stays in this resistance but breaks out of here, price is always going to come back to this level where it broke out of and retest it to see how strong it is. And most of the time, it's going to do that and it's going to push down wherever direction you go, right? Now, that's not always going to be the case. Um, there's this thing called a fake out. So, like I said, when price pushes back up, it'll fool you and close back into this consolidation area, right here. Price isn't doing anything. This will blow so many accounts because some people think this is why you don't buy up here. You have to wait for price to re-break this area in order to buy, because if it closes back in here, now this price can do anything that it wants to do. It can either come back in here and consolidate some more and go the other way, right? Or we can stay in this area and maybe like down the road push up, come back, and then break again. But we don't want to take that. We don't want to take that chance. So that's why I tell you, if price breaks this area again at the top, then you're safe to buy. Or same thing down here. If it breaks out of this area, right? We wait for this pullback right here and a continuation past this level right here. Once price can break that level, then you're safe to sell. But other than that, there's nothing else. This is some free game that I'm giving to the people. This is not my entire strategy. This is just like a little snippet of what I look for. I don't use indicators at all. And people might look at me like I'm crazy as hell, but why would I use lagging indicators? That makes no sense to me. So I use strictly price action, and I know how to read the candlesticks. and that's what I rely on.